Which stocks are set to outperform one of 2024's hottest tech players? If you think Palantir is unstoppable after its meteoric rise, think again. There are two surprising contenders that could eclipse Palantir by the end of 2025. Stick around to find out who they are and why they're poised to dominate.
Hi.
In today's video, we're diving into an exciting prediction: two brilliant stocks that are expected to surpass Palantir Technologies by the end of 2025. Thank you for watching, and please subscribe to my channel, The Finance Savvy, for more updates and insights into the world of stocks, markets, and finance. If you have any questions, feel free to drop them in the comments. Now, let's dive into the video. Prediction: Shopify and Uber are set to surpass Palantir by 2025. Palantir Technologies, Nasdaq, PLTR, has been a star performer in 2024, with its shares skyrocketing 360%. That kind of performance doesn't come along often. It's now sitting at a massive $180 billion market cap, which has drawn attention from every corner of Wall Street. But here's the twist. Certain analysts are betting that Shopify, NYSE, Shop, and Uber Technologies, NYSE, Uber, will outpace Palantir's valuation by the end of 2025. Bold claim? Let's break it down. Shopify, the e-commerce powerhouse. Shopify, currently valued at $140 billion, is an absolute giant in the world of online commerce. For it to match Palantir's $180 billion, its stock would only need to climb 29%. And according to Circle Capital's equity analyst Anthony Chukumba, that's not just possible, it's probable. He recently raised his price target to $140 per share, representing a 30% upside from its current price of $108. But why is Shopify such a force to be reckoned with? Dominance in e-commerce. Shopify merchants account for over 10% of U.S. online retail sales and more than 6% in Western Europe. That makes Shopify the second largest e-commerce company in these regions, trailing only Amazon. Wholesale trade expansion. Here's where things get exciting. Shopify isn't just about retail anymore. Forrester Research and IDC recently recognized Shopify as a leader in wholesale commerce solutions, a market that's 5 times larger and growing 50% faster than retail. This pivot could be a game changer. Financial momentum. Shopify reported stellar Q3 2024 earnings, with 26% revenue growth to $2.1 billion and a 46% increase in non-GAAP earnings per share. Plus, the company has outperformed Wall Street estimates for 8 straight quarters. That's consistency investors love. Looking ahead, analysts project Shopify's revenue to grow at 25% annually through 2025. While its valuation of 13 times forward earnings might seem steep, long-term investors with patience could see substantial rewards. Shopify isn't just growing, it's redefining e-commerce. Uber, more than just a rideshare app. Now let's talk about Uber, valued at $129 billion. For Uber to reach Palantir's level, its stock needs a 40% boost, a challenging but achievable goal. Wall Street seems optimistic, with a median price target of $90 per share, implying 48% upside from its current price of $61. Why the confidence in Uber? Market leadership. Uber commands a 76% share of the U.S. ride-hailing market, making it the undisputed leader. It's also the second largest food delivery service, holding a 24% market share. The network effect. Uber's dual focus on ride-sharing and food delivery creates massive synergies. The company's ability to cross-sell services is impressive. 31% of first-time delivery users come from mobility services, and 22% of first-time riders start as delivery users. This interconnected ecosystem drives customer loyalty. Advertising, the sleeper hit. Uber isn't just moving people and meals, it's also growing an advertising empire. In Q3, Uber's ad revenue jumped 80% year over year, and analysts project the ad business could generate $5 billion annually by 2027. That's a revenue stream with enormous potential. Financially, Uber is on a roll. Q3 2024 saw 22% revenue growth to $11.1 billion, with particularly strong performance in its mobility segment, up 29%. Non-GAAP earnings per share climbed 46% to 35 cents, proving Uber's profitability is no longer a pipe dream. Despite its successes, Uber stock is still 30% below its all-time high. Some investors are wary of competition from autonomous vehicles, but Uber's partnerships with companies like Alphabet's Waymo could turn this perceived threat into an opportunity. As the largest aggregator of ride demand, Uber is uniquely positioned to profit from robot access. Why Palantir might lose its edge. While Shopify and Uber are surging ahead, Palantir faces challenges despite its incredible 2024 performance. Its stock price already reflects massive expectations, and sustaining its meteoric rise could prove difficult. Palantir's market valuation relies heavily on its dominance in data analytics and artificial intelligence, but competition is fierce, and its current $180 billion market cap assumes significant growth is already baked in. Meanwhile, Shopify and Uber are positioned for strong, steady growth in their respective markets, making them potentially safer bets for long-term investors. Conclusion: the verdict. Shopify and Uber are two stocks worth watching closely. Their innovative strategies and proven market dominance make them strong contenders to surpass Palantir's valuation by the end of 2025. Whether it's Shopify's bold move into wholesale trade or Uber's explosive growth in advertising, both companies are positioning themselves as market leaders in their industries. Let's analyze Shopify, Shop, and Uber, to determine whether they could be good investments for you based on their potential growth, financial health, and market trends. Shopify, Shop analysis. 1. Company overview. Sector: e-commerce and cloud-based software. Business model: Shopify provides an e-commerce platform for businesses to set up online stores and manage their operations. It also offers complementary services such as payment processing, Shopify Payments, shipping solutions, and business tools. Market position: Shopify is one of the leading e-commerce platforms globally, second only to Amazon in terms of market presence. It caters to small and medium-sized businesses, SMBs, and increasingly enterprise clients through Shopify Plus. 2. Financial health. Revenue growth. Shopify has shown strong revenue growth in recent years due to the e-commerce boom, with double-digit annual growth rates. While growth has slowed compared to the pandemic-era surge, it's still robust. Profitability. Shopify has struggled to achieve consistent profitability due to its heavy investments in growth. However, its operating margins have been improving. Balance sheet. Shopify has a solid balance sheet with low debt and substantial cash reserves, which positions it well for long-term investments in R&D and acquisitions. 3. Strengths. 1. Dominant e-commerce player. Shopify's platform powers millions of businesses worldwide, and its scalability is a major strength. 2. High switching costs. Once merchants start using Shopify, it's difficult for them to switch to another platform due to the ecosystem of apps and tools Shopify provides. 3. Growth drivers. Continued e-commerce adoption globally. Expansion into enterprise markets with Shopify Plus. Growing revenue from payments, subscriptions, and logistics solutions. 4. Partnerships. Shopify has partnered with Amazon, Google, and other platforms, making it a strong omni-channel commerce player. 4. Risks. 1. Competition. Shopify faces competition from Amazon, Wix, Square, and WooCommerce, among others. 2. Valuation. Shopify's stock is often expensive compared to traditional valuation metrics, meaning it is priced for significant growth. 3. Macroeconomic concerns. Rising interest rates and reduced consumer spending could impact growth in the short term. 5. Prediction. Short term. Volatile due to macroeconomic conditions, but supported by ongoing e-commerce growth. Long term. Positive outlook driven by e-commerce adoption and Shopify's dominant position. Target price. 12-month price target. $75 to $85, depending on macro trends and earnings performance. Long-term potential. $100 to $120 plus as e-commerce continues to grow globally. Verdict. Shopify is a high-growth stock but also comes with higher risks. It's suitable for long-term investors who believe in the continued growth of e-commerce and are comfortable with short-term volatility. Uber analysis. 1. Company overview. Sector: transportation and mobility. Business model: Uber operates as a mobility-as-a-service provider offering ride-hailing, food delivery, Uber Eats, freight logistics, Uber Freight, and other services. It's a two-sided marketplace connecting drivers/delivery partners with customers. Market position: Uber is the global leader in ride-hailing and has a significant share of the food delivery and freight logistics markets. 2. Financial health. Revenue growth: Uber has shown strong revenue growth post-pandemic as mobility demand has rebounded, and Uber Eats has remained a key growth driver. Profitability: Uber recently achieved positive free cash flow, a major milestone for the company. However, its profitability on a GAAP basis remains a challenge. Balance sheet: Uber has significant debt, but its improving cash flow and operational efficiency are reducing financial risks. 3. Strengths. 1. Global market leader. Uber is the dominant player in both ride-hailing and food delivery, with a large customer base and network effects. 2. Diversified revenue streams. In addition to ride-hailing, Uber Eats and Uber Freight provide multiple growth avenues. 3. Post-pandemic recovery. Mobility demand has rebounded strongly, and Uber is capitalizing on higher bookings and rider activity. 4. Technology advantage. Uber's data-driven platform optimizes routing, pricing, and logistics, making it more efficient than competitors. 5. Long-term innovations. Uber is investing in autonomous vehicles and partnerships for ride-sharing electrification. 4. Risks. 1. Competition. In ride-hailing, Uber faces intense competition from Lyft, regional players, and public transportation alternatives. In food delivery, it competes with DoorDash and others. 2. Profitability concerns. While Uber has reached free cash flow positivity, maintaining consistent profitability remains a challenge. 3. Regulatory issues. Uber faces ongoing regulatory scrutiny regarding worker classification, data privacy, and ride-sharing pricing. 5. Prediction. Short-term. Positive momentum due to mobility recovery and operational improvements. Long-term. Solid outlook if Uber continues to expand its revenue streams, e.g., autonomous vehicles, freight, and improves profitability. Target price. 12-month price target, $50 to $55, based on growth in mobility and food delivery. Long-term potential, $60 to $70 plus, with successful execution of autonomous and electrification initiatives. Verdict. Uber is a high-potential stock with improving fundamentals. It could deliver significant returns over the long term but carries moderate risks related to profitability and regulation. Comparison. Shopify versus Uber. Category: Shopify, shop. Uber. Sector: Shopify, e-commerce/technology. Uber, transportation/logistics. Revenue growth: Shopify, strong but slowing. Uber, strong recovery. Profitability: Shopify, improving. Uber, positive free cash flow. Dividend: Shopify, none. Uber, none. Risk level: Shopify, high. E-commerce. Uber, moderate. Mobility/logistics. Long-term potential: Shopify, high. E-commerce growth. Uber, high. Mobility innovation. So, both Shopify and Uber have long-term growth potential but differ in their risk and reward profiles. Shopify, best for investors looking to capitalize on e-commerce growth and willing to tolerate volatility. Uber, best for investors seeking exposure to mobility/logistics innovation with improving fundamentals. If you're looking for lower risk, long-term plays, it may also be worth diversifying with large-cap tech stocks, e.g., Amazon, Microsoft, or ETFs. Let me know if you'd like further analysis or comparisons. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into the stock market and beyond. Got questions or predictions of your own? Drop them in the comments. We'd love to hear from you. Until next time, happy investing.